also our YouTube about a recap of what happened in April. So what we want to do is our team works very hard. A lot of things have been changing. I think it's more important than ever to really understand what's happening in the economy and what's happening in the markets. So I just wanted to give you guys and educate you guys about what's going on. So let's go ahead. I'm about to give you guys, help you guys out with what's going on for the month of April, what's happening. I know it's 5 days into May, lots been going on, but we just want to keep you guys updated, let you guys remind you, let you guys know what's going on. So with the recap, once again, this is presented by me, Jason Matthews of Matthews Financial and Insurance Solutions, President CEO of Matthews Financial, been in the financial services industry now for 18 years, one of the top financial advisors in the world, member $1 Million Roundtable, author of the book, The Age of Self-Reliance. The list goes on and on and on. But what I really wanted to do, it's not about me, but it's really about educating you so you can make the best decision for yourself, your family, your business, and your community. So let's go back about a recap of the stock market for April. So April, when we look at the things, we looked at the 3 major stock indexes. It was a very bad month for last April. So for April, the S&P 500 dropped 8.8% for the month of April. And we're seeing right now that has continued to go dropped and become negative. The Dow Jones average was the 30 biggest recognizable companies here in America had dropped 4.9% for the month of April. And then NASDAQ, which is the big index for stock-owned companies, dropped 13.3% in the month of April. So this is an easier graph for you guys to understand. This is provided by CNBC about how the 3 major indexes have. The winner of it, and the ugliest thing is the Dow Jones average down 4.9%. So year to date, when we look at these companies, the S&P 500 is down 13.3%. Remember, the S&P 500 is the 500 biggest publicly owned companies in the United States of America. The Dow Jones average is down 9.3%, and NASDAQ, which had a great time during COVID as it took advantage of COVID during that period of time, is down 21.2%, which is astronomical, crazy within that. So let's look at market measures. So the S&P is off to its worst start since 1939. Wow. While the tech-heavy NASDAQ is off to its worst start since 1971. The Dow Jones average just was showing losses not experienced since COVID of 2020. Remember in 2020, the stock market was going crazy. When we first heard about COVID, stock price was dropping and so on and so forth. The NASDAQ is having its worst performance since 2008. If you guys remember 2008, we had the housing bubble. It popped and exploded. It was chaos. People were losing their homes, so on and so forth. Amazon, which we all love Amazon, Amazon's dropped 14%. On one day alone to close out the month of April, its biggest loss of the day since 2006. So the first time in over 15 years, it had the biggest drop, while Apple shares have dropped 3.7% that same day. So April 28th was a bloodbath for the markets. The biggest in April wasn't just the stock market, but also Bitcoin, which dropped 17.8%. Last year, we heard tons of people talked about Bitcoin and crypto and all that. And right now, they're having a very challenging times as well during this period of time. On May 4th, so today is May 6th, so 2 days ago, the Federal Reserve, the people who have the most powerful people I see in America, because they have the power to print money, they have raised their interest rates by 0.5 point as they try to squash in inflation, because they don't want inflation to get out of hand. Because once inflation gets out of hand, it's hard to put the genie back in the bottle. The hike, which was the biggest hike increase in 20 years. So usually when they try to increase rates before, they try to do it by 0.25%. But this is the first time in the last 20 years that they've raised it by 0.5 point. And we're expected to see increases to continue as we expect it into June, and also throughout the year, more and more 0.5 point increases as well, as we're looking for a soft landing for the economy while they try to push the U.S. economy, not to push, I should say, the economy into recession. So this is very turbulent time in the stock market, was saying, due to inflation. Interest rates are increasing to fight against inflation, and we just don't know how things are going to go in the future. So this is what you have to do. We have to start really paying attention to inflation as it affects all of us. When we go to the store, when we buy groceries, we put gas in our tank, we have to pay attention to inflation. So April consumer price index, which is the biggest index for inflation, rose 8.5% in March compared to the previous 12 months. Price increases led to energy, which is up 32%. So you see that gas price, gas pump. We see it with food, which is up 8.8%. But guess what? It's not considered in the consumer price index. New vehicle prices are up 12.5%. One reason is because of the supply chain issue, and the shelters up 5%. While this is the highest mark in more than 40 years since 1980, there's one hope that inflation has already peaked and it will start to mercifully decline despite the war in Ukraine, the bottlenecks, China's struggle with COVID shutdowns, and U.S. demand. We're hoping that we have hit the peak of inflation. According to the Trade and Economics of official inflation expectations includes a drop to 7% in quarter two, 5.8 for quarter three, and 4.3 for quarter four. So what they're hoping for is that we could get back to tame inflation. The Federal Reserve would like to keep inflation at 2%. Anything that's run hotter than that is not good for the economy. So we're continuing to, they're saying that they're hoping that we continue to slow down the inflation so they don't get out of hand, but we're still going to see inflation more than they will like for the end of the year. Now let's look at these unemployment data. So according to ADP, payroll for non-farm jobs rose by 747,000 in April, falling short of its expectation of 479,000 in payroll. But in March, it was significantly lower at 383,000, right? So we're still hiring, but hiring is slowing down. Leisure and hospitality segments was somewhat surprising, leading the way for new jobs, with 77,000 new jobs in April, but it's coming less than half of what it was in March. Professional and service business at 50,000 jobs in April, followed by education and health services with 48,000. According to ADP report, small businesses, which are businesses with 49 or fewer employees, lost 120,000 payrolls last month, while medium and large companies had major gains. Let me break this down. I know a lot of small businesses, I know a lot of small profits, they're struggling to keep a lot of their good people. The reason being is medium to large companies can offer bonuses and compensation packages that the small companies cannot. I see such as in healthcare, in healthcare, you see Kaiser giving people bonuses in healthcare right now. We see it in other bigger businesses are giving 5 signing bonuses, better healthcare benefits. So small businesses are the ones getting hurt the most because they cannot find good people. So we're moving these 120,000 people are not just sitting on the couch, they're moving to medium and larger firms. So that's just what's happening in the employment data market. So here's what we're seeing for a recession outlook. Hopes is for a soft landing for economy post-COVID are dwindling. More and more economists thinking that there's a higher prospect that we are going to COVID compared to the previous month. According to Bloomberg Market survey that conducted between March 29th and April 1st of this year, 48% of investors polled expect the U.S. economy to enter recession within the next year. So that's pretty much 1 out of 2 think we're going to go into recession. Another 21% responds to expect us to fall in recession in 2024. 15% see a recession coming soon in the later part of 2022. So you have some people who think that we will be in a recession by the end of this year, but half the people think that we'll be in a recession next year. And then let's look at history, how it's performed. In fact, since 1955, whenever inflation has surpassed 4% and unemployment dropped below 5%, the U.S. economy has sunk into recession. So if you're a betting man and you love history based off your bets, there is a good chance that we will hit inflation based off of the fact that every single year every time that inflation hit over 4% and unemployment is under 5%, which it is right now, we will be in for inflation. We will be in some type of recession within the next 2 years. So with that being said, this is a good time to understand what's happening, making sure that you're prepared for the next recession. Make sure you have, make sure you're smart with your investments. Make sure you're smart with your cash on hand. Now let's talk about mortgage rates. Mortgage rates have climbed to a sharp rate over the past few months, with the average 30-year fixed national rate from just 3.22% the first week of the year to 5.12%. Let me say this. I went to the bank yesterday. It was over their bank over average rate was over 5.6 non-FHA loans. That means the mortgage rates have went up more than 2 points in a year. That's the fastest growth we have seen since 1994. That is almost 20. That's almost 20 years ago, 18 years ago, and that's why we're spending it in this includes that, which is just crazy right now. And another note about that, while it has been increasing, it even factors in that over the final week of April, mortgage rate actually fell for the first time in 8 weeks. So at the end of the month, it went 5.1% national average. Last week of April dropped. While that's sure to cause ripples in the housing market and cool buyers' demand as well as affordability, is no reason for alarm. Historically speaking, rates are still favorable. Consider that the previous peak before our current increase was an average of 4.94% in November 2018. It's not too far off the current market, which is recently as 2008, the average mortgage rate was 6.03, 7.4499, 8.38% in 1994. I think right now we have a huge amount of millennials like myself, I'm the first millennial, who have never seen in rates like this before, who just now getting the buyer's market because of our age. Where I'm in the older age of a millennial where I'm 38 years old, but a lot of us I have not used to these rates that were around in 2008, 1999, and 94. But it's funny when I talked to my mother, when she talked about her first house, she talked about how she paid 17% interest at the time. So right now we're seeing that it's putting a pause right now, and people are being more cautious when they're buying real estate. And also you have a lot of people who are looking at the affordability factor of buying a home. Rates are still at historically low rates. So here's a great quote right now. Consumer spending is the aircraft carrier in the middle of the ocean. It just keeps pulling ahead. This is the chief economist at Wells Fargo. Now let's talk about GDP growth. In the first quarter of 2022, gross domestic product fell by 0.4% when adjusted for inflation, or 1.5% on an annualized basis. That was a sharp slowdown from the 1.7% growth we saw in quarter four. However, not adjusted for inflation, in actual dollar terms, our GDP grew by 1.6% in Q1 2020, followed by a strong 3.5% actual dollar GDP growth in Q4 2021. So now let's go to consumer spending. So consumer spending is a gauge on our economy, as 2/3 of our economy is built on consumer spending. So consumer spending in Q1 went up 0.7%. That represents a healthy increase considering that the economy is suffering the siblings and arrows of the Omicron wave, supply chains woes, both home and abroad, in the war in Europe. Consumers are still spending despite inflation, although some economists wonder how long this rapid demand for goods and services can continue as a price increase, right? So the question is like, wait, we have inflation. People are seeing the inflation, but people are still buying. The question is, how long are people able to buy things without stressing out and deciding not to buy anymore? According to the economic analysis from Oxford Economics, the expectation for GDP growth has been downgraded to 3.1% for 2022. While that's just a forecast, it displays a pace of slowing compared to 2021, 5.7% GDP increase. So when we talked about earlier with the Federal Reserve, how they want to do a soft landing is going to cause the GDP to slowly slow down so we don't see any issues. While in 2023, they believe that the problematic with Oxford Economic Forecast, only 2% GDP growth. So how do we define being rich? What makes a rich person? According to surveys, being rich includes some money metrics, such as being able to afford the life you want. But it's not just about money. Only 4% of respondents say earning a lot of money makes you rich. Only 10% say it's about having plenty of savings or investing. According to respondents, considering yourself rich is about having the financial freedom, the life you want, including 30% say happiness makes you rich, and 1 in 5 who point to healthy and meaningful relationships. So now we're getting out of just think that money is going to make us rich. It's about having deep, meaningful relationships, right? And living the lifestyle we want, really being financial free, which is a huge thing, especially compared to the 1980s where we have Wall Street and all that times. Here's another stat to break it down even further for you guys to support it. And the source of this is by goingbankrates.com. By the way, I want to say thank you again, Norm, at the team for helping put together this nice PowerPoint for everybody to see as well. Now, if you have any other questions, give me a call, 510-229-7608. Email me at matthewsfinancial@gmail.com. Go to our website, mfis.biz. What I just want to do is for educate you guys. So when you have conversation with your family and friends, you can make the best decision for you and your family. If you guys want to get in touch, if you guys want to figure out how you can take advantage of this downturn, not just get involved with it, but be able to take advantage of it, make sure you reach out to us. I hope everybody have a good day.